All right, we are live. I'm always the worst with timing. First of all, hi. I have a webcam thing now. This is how a lot of the course goes, the Full Flights course, but I figured I'd bring it down to these live streams as well. I've realized I'm really bad with timing. 1 minute ago, the US markets opened, so it would have been nice to do this a little bit later, but this is going to be a very well-rounded live stream. I am going to guess it's going to be very long, so I'm comfortable. Get comfortable yourself, get some popcorn, a steak if you're being healthy, and we're going to start talking about the markets. Going to go through your questions, going to go through my questions, and really I want to walk you through absolutely everything that's gone through my mind, because I've done a little bit of analysis on this chart, but I've not done everything, so a lot of this is going to be blind analysis right here with you at the same time, and that always makes for some interesting content. As we're going along, drop questions in the chat. I will be looking at it. My assistant is also here looking at the content, good visuals and audio. Thank you very much for letting me know. As we're going along as well, we'll also be able to answer you if you want to find out about VIP and different things like that. Okay. This is a big daily candle. This is a big daily candle. We opened. Take a look at the OHLC on the top. Just make sure everything's in frame. We've opened at 7,938. And we're now trading at 5,940. We've gone as low as 5,500. So in total today, we have seen roughly $1,400 of price action. I don't know, actually, I can't count. Let me do this with the ruler. 2,400, my bad, dollars of price action today from wick to wick. And yeah, that's a big deal. This is a big dump, and we can't ignore it. The situation in which it came in is really important. Four Flies has been saying for a little while now that, you know, since we ended up dropping from, where was it? This formation over here, specifically the kind of bull flag we had over here, we had a really, really bullish setup, but the worldwide markets have continued to dip. Let's take a quick peek at them right now, and my god, it's terrible. Tesla's down to the 500s now. Boeing, shit, it's dropped by 15% today. This is insane. It was above $200 yesterday. So we've seen a really, really big drop in the markets today. Bitcoin is not moving out of sync with the worldwide markets. It's just that Bitcoin is traded 24/7. So wow, we do have a lot to talk about in this live stream here. I really hope you guys are very comfortable, because this is going to be a long one. And the worldwide market's crashing, Bitcoin crashing at the same time. First of all, let's acknowledge that this shouldn't be a surprise. Okay, we've known since maybe around about over here that Bitcoin has been moving in sync with the worldwide markets. Gold, on the other hand, you know, for example, has been doing relatively well. It's been stable, seeing a bit of a dip today, just like everything else, but it's not been crashing by these massive amounts that the rest of the markets are. Bitcoin has, though. Bitcoin has been dumping at that very same rate, and you know what it's telling us, first of all, most importantly, is that this is not being seen as a safe haven. And that means if worldwide markets are crashing, everything is crashing with it. Bitcoin, in this case, is moving in line with that. And that's bad. That's dangerous. More importantly, it's proving to us, we already knew this, but it's proving to us that Bitcoin is still seen as a risk-on asset. It's still seen as an environment where if you want to save your money, if the worldwide markets are crashing and you want to save your money because you're scared, you're not going to turn to Bitcoin. However, if you're optimistic and if everyone around you is making a shitload of money and you want to get rich as well, then you're going to go into Bitcoin. That's what Bitcoin has proven itself to be. But that's the good side. That's what happens during times like this. That's what happens during the 2017 bull market, right? When people are optimistic, when everyone's making money, they want to jump into more opportunities and they want to trade it like that. They want to make money like that. And that's the problem, because in the good times, it's amazing, but in the bad times, it's fucking abysmal. And that's what we're seeing now. You know, these are the bad times. These are the bad times. So that's what we're seeing now. We're seeing those sell-offs. We're seeing that blood. 25% down for Bitcoin, 10% for some other stocks. Yeah, Bitcoin gets hit harder. The other thing that it's proving to us is that Bitcoin is still doesn't have a lot of liquidity, still not a mature market. It's getting there. It's much more mature than it was before, but it's still not there. And so it still has a lot of ground to cover. But will it be able to cover that ground? We don't know. First of all, let's dive in. So that's kind of the overview of what I'll be talking about today. As we go, let's be dropping the questions, and I'll be scrolling up in the chat to read your questions. If you do have a question, if you can tag me at 4flies, that would be great. So I'm going to put it in the chat for you now, so you know what it looks like. Literally, just type it like that, at 4flies, and then your question. Because what that does is it highlights your question as being orange for me, so I can very easily tell when it's a question and not something else. It keeps the flow of these live streams very smooth. And yeah, from the technicals, I mean, one of the characteristics of these dumps so far have been that we don't even recognize support levels. And an example is, let's drop a horizontal line about over here. This was a support level. If we zoom out a little bit, we're seeing a lot of interaction with this price level recently and way back in 2018. Let's switch on to the daily chart. Starting to get a bit of a slowdown here. Let's switch on to the daily chart here. And, this has been an important price level for Bitcoin historically, but Bitcoin didn't give a shit when it was dumping. It really meant nothing. It meant absolutely nothing. Some of the support levels over here, for example, again, this also, but perhaps just about equally as important. I mean, it's basically the same price level. It's had a lot of price history. We're on the 1-day chart. We've had a lot of crucial turning points for the market at this price level, but while we dumped, Bitcoin didn't recognize any of it. And these were the signs. This is why I was saying a couple minutes ago, the first thing to say is that this doesn't take us by surprise. This is not surprising. I mean, the magnitude of this dump, yes, caught me off guard, caught everyone off guard. But the fact that it happened, that we are this low, that we are in fact dumping, not a surprise. Those signs were there. The signs were there that global markets are suffering. The Dow Jones Industrial Average hit a bear market yesterday, right? It dropped by more than 20%. In the face of that, Bitcoin really taking a tumble as well. So this isn't surprising. The people who were still optimistic at this time, of course, I was still trying to be optimistic, telling you that, hey, we still had support levels around and stuff like that. But the people who were still trying to be optimistic at that time, I think it was a little bit foolish. And it's really important, generally speaking, I don't pay attention to the news. There are going to be 1,000,001 reasons that people are going to point to for this dump happening, but I don't know any of them. I'm not paying attention to them. The one thing I did mention with you guys in the free Telegram channel, first link in the description below, the one thing I did mention with you is that this was shortly after CME announced that they'd be suspending trading. That was obviously a bit of an interesting sign, and maybe you want to point your finger as that for being a cause of this dump, but bottom line, we don't really know. That doesn't mean that you should be completely blind to the facts, though. What I've been saying for a really long time about how I handle news is I don't pay attention to it. A lot of the time, I don't even know what it is, but at certain points, I need to be aware of what's going on because it tells me how other people are thinking. And one of those situations is where I'm aware of the COVID-19 news. I was talking to a banker friend of mine, and we were discussing COVID-19, how I said originally that COVID-19 is the perfect scapegoat, the perfect thing to blame for all of these crashes in the economy, whereas he said maybe it's the instigator, the trigger, and then we settled on catalyst. So COVID-19 in this case was, and you had to be aware of it. This is where the news is important to pay attention to, but only to the point where you're just aware of it. All of the pieces of the puzzle for a crash in other markets, like Tesla, for example, is a very good example, just being massively overextended. Oh, wow, it's right at the 618 level right now. That is just perfect. Look at that. I love it when I draw something on the chart a long time ago, and I see that it's respected exactly. That's really cool. And by the way, that's a massive gap. I know the sell-off doesn't look very bloody to you, but that's because there are gaps in each of the trading events. That actually makes it worse. And so this is a really vicious sell-off, right? Markets like this, it makes a lot more sense. You look at things like the S&P index, obviously This is what is this sell-off? Hang on, I need to know. 24%, right? S&P 500 in a bear market now, just like that. We saw it happen live. This is the first recession I've ever lived through, if we're gonna have one. I mean, I was alive in the previous one, but too young. The pieces of the puzzle were there. We can tell really overextended bull markets, new all-time highs basically every week. All of those signs were there, and we needed something to trigger it and speed it up and just make it happen. And that really was the COVID-19 outbreak, So the reason I'm telling you this is it's important to know what's going on, but not to get emotionally attached to the headlines. The deal is, like I said, we already knew this was going to happen, that Bitcoin in the face of massive economic turmoil would collapse. I even told you a couple of videos ago that I had this massive theory. You guys were very aware of that March would be a month of a sell-off. However, I told you a couple days before this got really, really ugly that, the only situation where that theory doesn't apply is if this happens, and this happened. So that's kind of out of the window now. But it leaves a massive gaping hole of what's going to happen on the day of the halvening. This is something I've discussed at length, not even at length, but I've discussed at some length with Crypto Kirby. As you know, he is an analyst that I respect. I don't pay attention to many analysts in the space, but Kirby is one of them. And I discussed this halvening event with him. I'm going to talk to you about that later on in this live stream, so bear with me. That's going to come later. But for now, some more of the in-depth, some more of the short-term price action. Let's take a closer look. These two rectangles were really important. These signified some big support levels for Bitcoin. And as I said before, they should have been strong support, but we just fell right through them. On the 4-hour chart, there wasn't even a break. We closed the candle over here, and then we just fell right through it. If we break it down even further onto the 5-minute time frame, there was hardly anything that happened at these price levels. We've had a bit of a dead cat bounce over here, 2 dead cat bounces actually, and we're now already starting to tumble lower. That potentially means we're starting to eye and dropping into, the low 5,000s now, which we haven't been at for a very, very long time. But just analyzing how we dumped, got a couple bounces here, call it 2-3 bounces at this price level, and then we just fell right through it. No remorse, absolutely no remorse. The next box over here, this was the bigger area of support in the $6,000 range. Again, completely useless. Within the first 5-minute candle that we hit this level, we fell right to the bottom, right? This wasn't really important for the market. Managed to make a bit of a climb higher, then just consolidated and did some weird price action in between. And we're now already potentially looking to test lower levels and just continue that sell-off in a really, really bloody, abysmal way. So again, support levels are not being respected. One of the things that I'm seeing in terms of trades right now is recognizing, first of all, it's really hard to ignore at this point, that the market is bearish overall. That does still mean we can bounce up. I didn't rule out this bounce, for example, where we ended up hitting 8,100. In fact, I was ready to trade it. That does still mean that bounces are entirely possible, but it just means that I don't think they'll be very long term. I don't think they're going to stick around for long. And what that means from a trading perspective, for me specifically, is I'm mainly looking at trading the short side. There's 2 scenarios where I'd be opening trades, I think, for the most part. It'll be if we dump and then we trade sideways. I'll try and short the resistances or just short anywhere within the range if the range is tight enough, and then play it down even more. Or if we dump and then form some sort of a rising wedge, like what happened over here, I'll try and short as high as possible when we get closer to resistance level. So that might look like something like this now. I'd try and short over here and then play it downwards. Those are the only 2 real situations where I might be looking to trade. There are some bounce zones. I think that, and I was watching it live, I did think that it would have been a smart trade to buy Bitcoin below $6,000, because every time in my memory, and this is very strange, most times where we drop below $6,000, I've always been there to watch it live. I don't know why, just coincidence. But we've always managed to bounce right back up. Those bounces can be worth playing, but as you can see, they're very short-lived, and that steps into day trading territory, and I'm not a day trader. I don't do day trades. I think it's really risky and unsafe. and various different things like that. While we're going long, make sure you hit up those likes, subscribe if you're new to the channel as well. And so I don't like to do day trades. I think it's way too short term, but the long side does still work. You know, if you did manage to catch a knife successfully and safely, let's say you went long at 5,900, which I don't think would have been a bad place to go long, you would have had an opportunity to sell it a couple $100 higher. That's a good 10% move. You know, Bitcoin pumped by about $1,000 in just a minute, you know, so that kind of move, even a human could have predicted would be worth trading, and it would work. It's just that you would have had, I think, a safer trade if you instead traded these hits of resistance. I actually tried to do this myself today, but there were server overload issues. The market was just way too busy at the time. Got my Lucozade here. Bear with. So right now, I'm looking for those consolidation periods, and the next thing to do is identify where Bitcoin might drop if this sell-off continues. So that means zooming out, let's say onto the 4-hour time frame, and looking at some more historical price action. So let's go back to what happened around this point. Let's take a completely clean, fresh chart. We'll go onto the Gemini chart, and I just want to drop a bunch of important lines, and let's see where Bitcoin might be hitting them. And the reason I like to do this is, I told you this is going to be a little bit of blind analysis, is because if I draw lines right now without knowing where Bitcoin is trading, although I can't really ignore it because there's a dotted orange line over here. If I draw lines without really knowing where Bitcoin is, I can be a lot more unbiased with my analysis, and that can really help out. So how does that look? Well, let's get my horizontal line, and I just want to drop a bunch of lines at important turning points in the market. We're pretty much at one right now. You know, potentially another one around about over here in the $5,000 range. And then let's move the chart back even more, and I think we might be able to call one important line over there. Definitely an important resistance, or in this case support, down at 4,200, and then, you know, below that we've got a couple other important levels that we can be eyeing as well. But other than that, I think those are many of the important ones covered. The bad news really is there was a lot of support in this range. Like I said, $6,000 was supposed to be an important support area for Bitcoin, but it's mostly already failed. So if we are going to continue the sell-off, the only place left to go is into the $5,000 range. And by the way, you'll notice that there is a big gap over here. When you guys will remember that I was calling for the end of the bear market around about at this price level, I was also playing a long position, which ended up hitting something like 360% profit. I closed it around at this price area, or maybe a lot earlier than that, I don't remember, but it was a really, really nice profit, 360%, can never forget it. It's one of those big trades that you never forget. And one of the important, oh god, that's annoying. One of the important things about that trade is that I was specifically telling everyone, not just VIP members, that if Bitcoin did end up breaking this resistance over here, it would probably pump right up into the sky, into the $5,000 range. And how did I know that? I knew it because there wasn't much trading the previous time we hit this level, and also way back in 2017 there wasn't a lot of price history around this level. Let's go into the daily chart because I don't think we can load this on the 4-hour time frame, and as we can see over here, not a whole lot of price action when we hit this area as well. When we traded within this area, we had clean moves. We just traded once up and once down and then once up again, and that was it. We didn't really mess about in the range like we did, for example, over here, like we did around this area or around this area. It was very, very clean moves, and because this area didn't have a lot of price history, it was telling me that whichever way we hit that area from, we're probably going to jump right into the next one. And in this case, that meant the $5,000 trading range. Now, it was a really, really fun trade. And of course, if you want to see how I'm going to be trading the market, you'll get access to all of that information in the VIP group. A testimonial I showed you from a while back over here, remember, who was pulling some profits on the beach. Absolutely beautiful stuff over there. I put out a bit of a post telling you about how, Bitcoin has dumped by a massive amount, 40% in the last 3 weeks, all right? I mean, when Bitcoin drops by more than 40%, that's usually what classes Bitcoin as being in a bear market. It's very funny because in regular markets, it's usually about 20%. In Bitcoin's case, it's 40. If it drops below 40, it's very unlikely that Bitcoin is able to recover more, is able to recover and continue a bullish trend rather, and I'll show you why. Let's go on to the Bitstamp chart, and if we take a look at this chart on the daily, let's get this to load properly. We take a look at this chart, and we'll take off all the drawings and just have the ruler tool to hand. Switch it onto the logarithmic so it's a bit easier to see. We can measure the highs to the lows before the trend continues, and it's rarely ever more than 40%. So this high to here, 39%. How convenient. This high to this low, 40%, 39%. How convenient. This high, right? 31%. Just keep drawing it back. And again, very rarely does it drop below 40%, right? We'll do this one again just as a final test. 32%. In fact, fuck it. We'll go a little bit further. Bitcoin very rarely drops by more than 40% and keeps its bull run. The last time which is very memorable that it happened, it dropped by about 70% within 1 or 2 months, and it triggered this fun area of price action. So we know from a lot of experience that when this happens, it can get really ugly for Bitcoin, but that doesn't necessarily mean it's bad to trade. I personally, in terms of trading, made most of my money after the bear market started. I made it within the bear market of 18, 19, 20, whatever. And so, God, this sell-off in the face of all of this price, you can't ignore this. This is just, look at how big this sell-off is compared to any other candle we have. I mean, this is just terrible. The last time we had a candle like this was probably around over here, or maybe one of these. That's it. That's all I can see. But anyway, a lot of the money can be made in a bear market. One of those reasons is, the good news with a bear market is every price area you're visiting, you've already been at before. So you know where the support levels are, you know where the resistance levels are, you know where the gaps are, like the gap I showed you over here. Because we were down at this price level, I knew that we had a high chance of just rising right up from this area because we had a lot of price history over here to tell me that. When you're hitting all-time highs, you don't really know what's going on. It gets really messy when we start hitting these kinds of price areas. So you will remember back at this point, I didn't even post much analysis because I didn't know what was going on. We don't have much price history at this level. There's not really much you can analyze. It all, at that point, just goes off emotion. And that's fine. I mean, this trading is also off emotion, but at least now we have technicals to back it. And so it is very possible to make a lot of money trading the bear markets, and that's what you're seeing in the VIP group. You're seeing how I'll be trading the ups, mainly the downs, how I'll be leveraging the price speculation that we do have in the space, and how when other people are losing their shit, it's still possible to make a lot of money. There is still a big sale going on in VIP. My assistant is right here reading the chat and the messages you're about to send asking about it. It is 50% off and it's ready for you to join if you are interested. Couple testimonials I got as well, 48% profit on a trade worth the whole of the subscription. And again, showing that you don't need a massive balance to be in the VIP group. We've had many people joining with under €1,000, under $1,000. It's international. It doesn't matter where you're from. It doesn't mean it doesn't require a large bankroll to be able to join the VIP group and make the most out of it. That's not a thing. We've had a lot of people with small balances get in, but also people with bigger balances. $30,000 within a few days, making a yearly salary off trading. These kind of gains oftentimes are made in bear markets, so it's entirely possible to be pulling absolutely beautiful profits, paying the fees off times over. Absolutely amazing. And maybe my favorite one I'll share with you just a little bit later, but if you do want to get into the group, you already know how to do that. Hit up the first link in the description down below, click on the @4flies button and ask me how to join. Click on send message. We'll get you in the group and get you set up with it. You'll be able to see how I'll be navigating this market. So like I said, identifying where some of those important levels are with the chart onto the Gemini chart once again. We are very close to this important support area over here. Let's zoom into the 5-minute and see how we interacted with this price level. And already you can see we're starting to get some candles interacting with this price level. So what I'm thinking right now is if we do end up dumping lower, and right now it looks like we will, because I know this is only the 5-minute chart, so I shouldn't be analyzing it. But here's the other thing, which is really important. It's something I cover in depth in the Four Flies Academy, is that when you've left an area of high volatility, of low volatility rather. Okay, let me start again. When you leave an area of low volatility, so that would be this kind of general area. This wasn't low volatility, but compared to now, yeah, it was. When you leave an area of low volatility and you enter an area of high volatility, the price action usually happens much faster. That's exactly what volatility means. And that means the shorter time frames, even though they might usually not be valid. So for example, if you drew, if you drew, in this case, a descending triangle over here, which you could have done, well, you would have been correct, but there are a lot of instances where you wouldn't have been correct. Maybe an example might be something like this, I don't know. You would have potentially, actually this would be more like a bull flag, right? So when you do short-term analysis in areas where there isn't much volatility, it can go bad for you very often. But when you are now in an area with a lot of price action, which is really intense and happening very quickly, it can, I can't unzip this. It can be really beneficial to be aware of what's happening on the lower time frames. This is another example, like with the news that I mentioned, where it's fine for me to break my own rules. You know, I don't pay attention to the news in most cases. As I said, I don't care about what happened over here, but I did pay attention to the COVID-19 news because it allowed me to prepare for how I'll be trading the market. It told me not to enter long positions on Bitcoin. It's exactly what I didn't do, saved me from getting screwed really, really badly. And so in the face of that, this is a similar situation where I'm willing to break some of my rules on doing short-term analysis on very, very small time frames like the 5-minute, because I can see that it's probably going to be helpful to me because we might be ready for a lot of volatility in the next few hours. And if that's the case, I want to be prepared for it, and I don't want to be closing my eyes to those possibilities just because I have a hard rule that says don't analyze the 5-minute time frame. I think that's very naive. I don't think that's smart. And so going forward like that, if we do end up forming a descending triangle here, or rather if this does end up being a descending triangle and we break lower, one of the things I'm going to be most keen to see is dropping into this range and trading sideways, or however we do it. Doesn't really matter. I'm seeing your messages about VIP. That's absolutely great. I need to charge my phone. And when you do drop, if we do drop into this price area, one of the things I'd like to see is us hitting this resistance area. And the reason I want to see that is that would be a really predictable way to start entering some trades. And one of the best things about that at the moment is right now we are in this area of high volatility where it's really unpredictable and anything can happen. And we can even get like $1,000 candle that pumps us higher, entirely possible. I'm not going to rule it out. We can get something like that happening. And if that does happen, I won't be in my trade. But if we do end up cooling down a little bit and we end up entering a safer area of trading, we end up cooling down, price action gets a little bit more conservative again, it gets a little bit safer to trade once again, that would then put me in a really, really safe situation to start entering some more trades. And that's exactly where I would like to be. So a lot of boxes end up getting checked if we drop into this range and then hit the resistance area over here before continuing to trade in any particular direction. In terms of trading higher, well, one of the things that I need to be aware of in this case is we didn't interact with support levels, correct? But we might interact with resistance levels. So let's go back onto the Coinbase chart and I'll show you what I mean with that. If we go onto the 1 hour time frame now, I'm seeing those likes as well. Keep it coming in. Absolutely beautiful. It really feeds my ego. If you see how we ended up dumping down from these important price areas below the important support areas, we didn't interact with them at all, which is a sign that there's a lot of weakness in the market. correct. But if there is a lot of weakness in the market and we somehow are able to trade higher into this green box again, well, just because we didn't use it as support, it doesn't mean that we won't use it as resistance. You know, just because we didn't use it as support like that, it doesn't mean that this isn't possible. In fact, it might make it more likely, because if we just fall right through the support level, it means two things. Either support isn't being used because the market is weak, or no lines are being respected in any case because the market is just completely ruled on emotion. And I think both explanations make a lot of sense, but I think it's also smart to acknowledge that, yeah, I mean, if a support level doesn't work, it might just strengthen the resistance level. Let's break it down into real human terms. You and I, what are we going to be doing with our Bitcoin holdings? Well, we've just seen Bitcoin plummet by 30% in a couple of hours. If Bitcoin ends up falling into important price areas, rising into important price areas like this, and you know that that's where resistance is because Four Flies drew his box over there and you drew your box over there and everyone around you draws their box over there, are you going to be sitting thinking that, hey, we might just act as if that's an invisible box and nothing's going to happen? Or are you going to think, do you know what? I bought Bitcoin at $7,000 2 years ago, and I don't care if I can't break even. I'm happy to sell over here and then potentially short and play the price lower. What is the likelihood? I think it's quite overwhelming that if we do end up hitting these price areas, there's going to be a lot more selling pressure, because as humans, as people who hold on to Bitcoin, as institutions, as whatever, seeing this dump is only an opportunity for us if we end up rising to sell off. This is where the market potentially gives us an opportunity to exit at far from an ideal price level, but way better than what we might have otherwise gotten. I'll give you a really good example of where this happened. We go into the 4-hour time frame and we'll go back to what happened in 2018 once this chart loads. I think the best example of this is around over here. What we had at this price level was Bitcoin was trading from $20,000 down to $6,000, an absolutely disgusting event of capitulation down from roughly $11,000 to $6,000, and then a very quick V-shaped correction higher. So this was a lot like when we fell down to about 5,500 today and then recovered right back up to 6,700. It was exactly the same thing. In fact, before I continue, let me show you. I have to go into the 1 minute time frame for this. We got exactly the same thing. We didn't end up dumping from 6,700. We were already in our dump, but we got our V-shaped correction in exactly the same way. Okay, now that I've proven that point, let's go back because this is really, really important. I actually want to remove the circle that I drew. Bear with me. This doesn't want to load today, does it? Okay, there we go. And what we had at this price level was our capitulation triggered from roughly $11,000. We got our V-shaped correction, and the market in this case, in exactly the same way I said might happen now, gave us an opportunity to exit at a price which wasn't ideal, but it was the closest we could get. And at this price level, people were not thinking, in this case, I mean, clearly many people were thinking this. This is why we recovered so quickly, but the overall majority of money was not saying that Bitcoin is going to continue to rise at this point, because we got to this level and it turns out that this is just a good enough place to exit and people don't want to play their risks anymore because they've just watched Bitcoin drop by 70% in about a month and a half. And so, was this a month and a half? Let's actually take a look. This was 50 days, so nearly just over a month and a half, people watched Bitcoin drop by such a massive amount, and that was basically just an opportunity for people to cut their losses and exit at this price level. And then the market was kind enough to give us the opportunity a second time, and and that's rare. And so I think in a situation like that, it is really hard to think that Bitcoin would be able to continue recovering higher, because what you have are a lot of people who got absolutely fucked, who are just looking to exit at a price which is respectable, at a price which has some price history, right? So on the way back down, I think one of the reasons that we didn't end up stopping over here and then continuing on lower is that there wasn't much price history at this $8,000, $9,000 level. There wasn't much price history around this area, but there was a lot more at the $11,000 range. Let me visualize that for you. Let's take the VPVR indicator, which is designed exactly for visualizing where important support or resistance levels might be. Let's wait for it to load, and we can see that there is a beautiful spike over here. I think I need to replay the chart because this won't look clear otherwise. Let's replay it from here and now show you the VPVR as it was happening at that time. And what we had over here was a really, really nice spike at this price level, which told us that there is a lot of price history over here. Potentially a little bit more as well at $14,000, but we just didn't have the strength to climb there, and so this was just a really easy place to offload some Bitcoin. So moving back to where we are right now, literally the same thing, literally the same thing. You know, I would expect that if we do manage to climb our way a little bit higher again, this is just going to be a respectable area for Bitcoin to be sold off a little bit more before it continues dumping even lower. And unfortunately, you know, when you do have important support areas like this being broken, you have to fall down to the next important support area. You know, that's usually how it goes. And so let's take a look at where that might be. Again, we'll use a clean chart so I can do some drawings for you. We're onto the Gemini chart once more. I know I've drawn all of these lines, and I know these lines are absolutely beautiful, but we're going to remove them now. These lines are very easy to draw, so you can draw them yourself as well, obviously. And what we had over here was a really big spike on the VPVR indicator right here at roughly $6,400. Now I have got a very high level of precision with this indicator. It starts off I think at 50, and you can see that the boxes are way thicker. In this case there's a lot more precision with 200, or if you even wanted to take it to 600 or 6,000 or something. I like to keep it at 200 because it loads relatively fast anyway. And what we had here was a big area where Bitcoin had a lot of price history and it failed it. And typically when you do fail a big area of volume, you end up hitting the next one, right? So I used the exact same thinking when I told you that I expected Bitcoin to go from 4,000 straight into the $5,000 range. I used the same thinking. It looked a little bit more obvious back then. In fact, let's replay the chart and I'll show you exactly how it looked. Let's take a look at this. So we had a really nice spike on the VPVR. This is going to be a little bit difficult to see. But we had a really nice spike around about over here. It's very dark, I know, but I can't make it brighter. And the next spike was all the way up here at the $6,000 level. And so what I was telling you is that we did have a small spike at roughly 5,500 thereabouts. And we also had a little bit of consolidation over here. And because this consolidation was recent, that's why I knew that trading a long position up in this gap would have been really, really beneficial, because there was no price history around this area. There was no trading, there was no volume at this price area. So it was very likely we would leave this area of high volume and enter the next one. Again, that's why, like I said a couple minutes ago, trading within bull markets can be really beneficial. Within bear markets, because you already know where the important price areas are. There is a lot of emotion in any case, whether you're trading a bull market or a bear market, but at least in a bear market, you know what's happening. Like I said, a lot of the people I know, myself included, have made most of their money in those kinds of situations. Of course, it's always easier to make money in a bull market, but we don't have that, so we need to work with what we have at the moment. And the point of this is that it's still possible to make really good money, even if the market looks terrible. You just need to be able to keep your head on your shoulders and you'll be good, or even on your neck. Let's take off that replay now. And so I forgot what point I was making. Go back onto the 1 hour time frame. Yeah, completely lost me. Right, and yeah, so hitting the next area of volume. So if we go onto the 1 day time frame again, that volume starts to pick up a little bit around this price area. We can see that there is a spike on the VPVR over here. In this case, thank God, it is a little bit brighter. So we can see that we've dropped below this one. In fact, I'm going to manipulate the chart a little bit so we can see this. We dropped below this spike, and the next big spikes are in the $3,000 range. It's too early to talk about that, in my opinion. We will discuss it anyway, but it's too early. We can see that we've already gotten stopped where we are starting to see some more spikes in the $5,000 range, you know. So we are already seeing that this price area is giving a little bit of interaction with Bitcoin at the moment, and that's where I think it would make a lot of sense for Bitcoin to kind of trade sideways for at least a little bit before we do continue downwards. If we continue downwards, you know, I think that would make a lot of sense. It depends on a lot of things. It depends on, you know, things like the fear and greed index. Understandably, fear is going to be extremely high right now, so the possibility of dead cat bounces or rising wedges are also pretty high, just because the markets are designed not on purpose, but just the laws of nature or something, to screw over as many people as possible, you know. So it would make a lot of sense if we end up kind of liquidating a bunch of shorts, different things like that. I'm not ruling it out. And so, you know, that's why I was potentially talking about, you know, we might end up seeing this price level again, and this would be a beautiful rejection. It would be really hard to break this area of resistance, because I mean, we didn't even consider it as support, you know, and that to me sounded like something that's that to me looked like something that really represents that Bitcoin isn't going to be able to hold from these support levels, and is just going to kind of drop like a stone once it starts to see some of these resistance areas. So that's what I'm seeing. I want to see a little bit of trading around this area, see us making use of this as support. That's going to put us in a nice trading range. And one of the other good pieces of news about that is it makes it a little bit easier to use high leverage amounts within this price range. So again, just kind of going in line with that fertile trading environment kind of thing. This does look good from that perspective as well. I want to get on to some of your questions now. So I'm going to be scrolling up. Leave your questions as we go along. And as I said, tag me with @4flies if you want me to answer whatever you're putting out. Scrolling right to the top so that I don't miss anybody. Hey 4flies, I'm from Crypto Coach here. What do you think for the first time recession and pandemic happening together? Yeah, so I touched on that earlier in this live stream. You know, the fact that COVID-19, the outbreak for that is happening right now, it's amazing timing. All of the pieces of the puzzle were already there. I showed you Tesla as an example, where Tesla was already way overbought. You know, stocks like Amazon and Apple really just making massive runs. I mean, this is great, and I think they deserved it, but at the same time, worldwide indices really hitting, you know, all-time highs very, very regularly, unnaturally even. My God, what is this sell-off? This must be more than, yeah, shit, this is 30%. That's on Germany's DAX. That is crazy, right? And so on the weekly time frame, for example, we can see over here just hitting all-time highs very regularly. And then there's a lot of people talking about things like 10-year cycles. You know, every 10 years we're due to have a recession. The last one was in 2008, so we're overdue by now. And typically in situations like this, when you are overdue for a correction, the correction ends up coming really strong, coming in really harsh. The best example we all know is Bitcoin. You know, Bitcoin was rallying from 2015 up until 2017 over here, and we can actually see that. Yeah, we can. From 2015, this is where that rally really started to pick up on the logarithmic scale. We can see that at the end of 2015, for, you know, 2 years straight pretty much, we're rallying really, really hard, and the harder it goes, the longer it goes, usually the deeper the correction is and the longer the correction is as well. And I think that's what we might be seeing right now with some of the real world markets as well. You know, if that's the case, if we are in a cyclical 10-year thing where every 10 years we need to have some sort of recession for the growth, that's how it has been for, you know, hundreds of years. Let's see how far back we can go on something like yeah, Germany's DAX. We can go back quite far. Let's switch on to the monthly time frame. Let's see just how far we can go. Yeah, I think, you know, this is quite a similar story. You know, every X years we end up rallying really nicely, then getting a setback, rallying really nicely, a big setback, another rally and a setback, and well, this is just how everything trades. It always trades in this kind of way. And in that case, COVID-19, again, it wasn't it was potentially a coincidence that it happened at this stage, but I see it as a catalyst. It was just the one thing that brought all of these pieces of the puzzle together. The real meaning of catalyst in science, for example, I think, is where you've got all of the all of the compounds that would be ready to interact with each other in the same place, but they just need to be heated up to the right temperature in order to react. And that's what the catalyst provides. It provides that heat. Something like that. Don't quote me on it. And so I think that's what the virus was in this case. All those pieces were already there. They just needed to get heated up to such a point where it gets bad. And we have to bear in mind, yes, there is an element of people blowing this out of proportion. There's a lot of people saying that, oh, this is just a stronger version of the flu. And they're correct. That is what this is. It's also a case of, well, it's undiscovered. There's no vaccine for things like that. So it's a bit worse than a flu and definitely far more dangerous. But at the end of the day, still, for most people, it's just going to be like a normal flu with potentially some slightly worse symptoms. That's not huge, but it's already had real world impacts on industries around the world. A really good example, we'll take a look at Apple. Apple has started to drop massively, and it's already announced that they're not going to be able to deliver all of the iPhones and various different devices that they're producing this year on time, or there is going to be a shortage, because a lot of workers in China, which is where they manufacture their products, a lot of their workers in China are taken sick. And, they're self-isolating, they're staying home as a precaution, whatever the case may be. In the face of that, we've got a lot of shortages of products coming in and different things like that. But that's not just a China problem. That's turned into a Europe problem as well. A lot of people working from home, productivity going down, some people being taken sick anyway, so they can't go to work. Airline industries getting absolutely pummeled. I mean, what is this sell-off? From the all-time high down to where we are at 63%. This is not Bitcoin. This is a real world. This is Boeing. This is not just a real world stock. This is Boeing. Boeing is a big company. Boeing has government contracts for defense in the US. Right? I mean, they make spaceships. This is Boeing down by 64. But this is insane. And, it's not just Boeing. EasyJet is another airline within the UK. They've got some really patchy trading, but if we switch on to a larger time frame and take a look at how they've performed since all-time high down to where they are right now, again, it doesn't get much better. 62% over here. It's airlines taking a big hit. This is an example of where, yes, the COVID-19 outbreak may be being blown out of proportion, but there are situations here where it's genuinely disrupting industries. That is that's a sign of a recession coming in. Don't forget that a recession isn't particularly hard to achieve. The definition of a recession is simply the economy shrinking for 2 consecutive quarters, for 6 months. To say that this is going to have effect for 6 months, I don't think that's... Come on, I mean, I don't think that's unreasonable. 6 months of this year, being surrounded by a shrinkage of the economy. I don't think that's surprising at all. So I hope that answers it. And then, bringing it back to Bitcoin once again, Bitcoin is a risk-on asset. It's where you're coming in if you want to speculate and grow your money, and if you're tired of the risk and you want to be out of the market when the markets are looking bad, you're going to get rid of your Bitcoin. And if too many people do that at the same time, we get dumps like this. So that's my view there. I wish I could say more positive things. The only positive, I guess, to draw from this is that it's still entirely possible to trade and make some good money. Delicious. I love Jaffa cakes, and I found little nibbles of them right there. I don't even know if you can see that. I shouldn't be doing that. Yeah, okay, I've already answered that. Is the dump related to CME Group closing offices for fear of the virus? Yeah, I mean, that's something I touched on where I said that we're feeling the effects of it in Europe. Where, well, I mean, even in London, Canary Wharf has had some people sending their workers home instead of working. I've actually spoken to a couple people around the industry in London, and that's what they've been saying as well. A lot of people are self-isolating, so it can lead to productivity going down. I don't think that's a big enough reason, and I don't think that's why this dump happened. I honestly think that this dump happened out of fear. There's a lot of, obviously, circuits. You get circuit breakers. A lot of those things have been triggered with the sell-off that started, in the early hours of today, depending on your time zone. This didn't look like it was just a 1 minute dump that happened by bots. It could have been triggered by bots, yes, but this is indicative of real price action where people are just capitulating. Capitulation meaning throwing their hands up, giving up, and thinking, that's it, it's done. And it makes sense. One of the things I've been saying in recent videos, you guys hate hearing me say it, but I mean, now at least it's not going to be so difficult to hear, I hope. Where I'm telling you that a lot of the money that controls Bitcoin now is institutional white-collar money. People with the nice expensive suits getting into their buildings in Chicago or wherever and doing their work and then going back to a wife that's cheating on them. That's how it goes. And in the face of that, with the real world markets collapsing, if they remove their hand that blesses Bitcoin, this is what happens. This is what happens. Yeah. It's a risk on asset. This is what happens when things go bad and people want to secure their money. I know people hate hearing it, and I definitely didn't like saying it either. A, because I knew people would hate it, and B, because I hold Bitcoin too. I don't want my investments to go down. But it's one thing to own something as an investment, and it's another thing to be delusional. And now, when I told you that Bitcoin has originally failed its purpose, and I said this way back, I think around over here, it makes sense. I was the crazy guy, and I'm still the crazy guy, but the warnings were heard, the warnings were received, and I can only hope that the losses for you guys watching weren't terrible. Of course, when I do make those trades, you'll be seeing what I'm doing, and one of the other things I want to touch on is that this is the 4Flies VIP library. This is where I'm putting out a bunch of videos and guides and different things like that on how I'm doing what I'm doing. Some content on the analysis I do. And I've put together a tutorial series for VIPs where I'm explaining to them what TradingView is, how to analyze on TradingView basics of candlesticks, tutorials on how to use different exchanges, explanations on different types of orders. So this is really geared for people who are completely new to the game. It really is kind of like a skyscraper. You can get in at floor 0 or get in at floor 50, and it's still going to be tailored to you, because if you're new to it, you've got these resources to explore in the VIP library. When you message me asking about VIP, obviously the steps to do that are right here. All of that information is ready for you to study once you get in the group, and we already know how you can do that anyway. So that's all ready for you to do. And here's a message of someone who was relatively new to the game, closing a 60% profit, which was absolutely beautiful. This was his first trade and closed a 60% gain. That's just dropping bombs on the space. I loved it. Those kind of feelings of euphoria. The market is it's super risky. I mean, stuff like this isn't normal. It's very irregular to see something like this, but it's possible, and that's the point. 90% of traders will lose their money. I was obviously part of that. Most people, even if you are new, even if you are going to be this guy eventually, or this guy or whoever it is, or any of these guys, oftentimes you will have to go through a lot of pain and losing a lot of money to get there, but that's why you're in the game. You're in the game because you know that the risk is extremely high, but the upside is also extremely high. Nowhere else can you have an idiot like me at 18 being able to jump behind a laptop and start, trading at a beach or whatever like this guy did. It's not possible, and so you pay for that risk. You earn that reward by paying for that risk. Essentially, that's kind of how that game goes. Let's go to a couple more of your questions. 10 minutes ago, S&P 500 opened. Have a look. Yes, I will look a little bit more at that in a bit. 4Flies, now that $6,400 support level is broken and 5.5 is reached, which price level should we now see as possible whale institutional entry price level? That is a very good question. look, here's the thing with institutions and whales and different things like that entering. First of all, I think we're in a recession, or at the start of it, so I don't think there is going to be anyone looking for risk on assets for a short while. However, if I'm wrong and people are looking to enter, there's only one criteria for that: accumulation levels. One of the things I was telling you about why I thought the bear market ended in late 2018, early 2019, was that we were trading largely sideways. We were trading for a very long time. Let's take a look at the ruler tool. For a very long time, within a 30% price range, which only stretched for about $1,000 for about 4 months, right? So it was a very long time that we traded in a tight price range, and that is a sign of accumulation. That is a sign of accumulation. If you're trading within a tight price range for a long time, that is a sign that when you hit lower levels, they're not letting you drop the price even lower. They're buying back up, and we're stable in this price range. So smart people who know the price is going to go up or strongly speculate that it will, they are loading up on as much Bitcoin as they can at that time to trade it higher. And so what that means is, before anything amazing can happen, we need to have some sort of consolidation. We need to have some sort of flat line so that accumulation can be done again. And again, it's really important to stress that that doesn't mean it's not possible to trade anymore. It's still entirely possible to be booking a bunch of trades, just as I did in the VIP group back then, as it is, kind of right now as well. And so that's why I think that it is going to take a little bit of time to potentially have some whales and stuff like that entering, because we haven't even started trading sideways yet. And we'll only kind of know that answer within a couple of months if we might be in an accumulation range. At this point, any range would make sense as accumulation. One of the theories I had when we were initially breaking out of this is that we might be trading sideways between 14 and 3,000, and I told you about that theory again, I think just in the last video. This might be proving that, so if that's the case, then dropping down to this price area would potentially be another area of entry, of accumulation for the bigger players in the game. I'm not saying that's the case, I have no idea, but it wouldn't surprise me. It wouldn't surprise me if that's what happened, and so that's a potential price area for entry. But really, the only sign I would be looking for is, are we trading sideways? Is it indicative of an accumulation range? Let's take a look at some of the stuff we've got. S&P 500. Do I think the continuation of the COVID-19 outbreak would drop Bitcoin below 3K and reach new recent lows? If so, what price would I expect? Very good question. Very good question. Let me repeat that. Do I think that the continuation of the COVID-19 outbreak would drop Bitcoin below 3,000? And if so, what price levels would I expect? 6 months is a long time for global markets, and 6 months is a very bloody long time for Bitcoin. Let's use my favorite friend, the ruler tool, and look at what happened over the past 6 months. I can't do this math, hang on. It's 30 times 6, that should be easy, but I can't do that. 180, it's 180. Gonna go back by 180 days. 180 days, we were at $10,000. And in that time, we dropped from 10,000 to 8,000, and then 8,000 back up to 10, and then 10,000 down to 6. And then 6 up to 10, and 10 down to 6. A lot has happened within the past 6 months for Bitcoin. And a lot happens in the real world markets in 6 months as well. If we are about to hit a recession, and by the way, I don't think that's dependent on the COVID-19 outbreak. I think that the worst of this is pretty much behind us, or we're about to peak in terms of the worst effects of the COVID-19 outbreak. I think we're literally only 1 or 2 weeks away from this. South Korea already settling down. China already almost completely settled down. Rush hour happening at normal times and stuff. Life is getting back to normal in these in these countries, which have been among the first to have their outbreaks. And so this virus peaks really quickly. So firstly, I don't think this question depends on the outbreak at all. I think it just depends on COVID-19 was that initial domino that set all the other dominoes off as a chain to be falling. But if that does mean we are about to hit a really, really big market crash that lasts a long time, well, a lot can happen in 6 months. And if the overwhelming pressure for Bitcoin is bearish during that time, then yeah, dropping below $3,000 wouldn't surprise me. It's also important to note that we've been at $3,000 before. That can mean two things. That can mean if we somehow start to gain some bullish vibes within the space, well then, $3,000 is an area which has had a lot of price history, so it's respected, and so it would make sense that we bottom out at this price area again. However, that's usually not what happens when you dump. When you dump, there's usually a lot of scared emotions around the space. And if that's the case, then we've been at $3,000 before, and clearly it wasn't good enough to flush out the toxins of the market, because we ended up topping out very soon afterwards at 14. And so it might mean we have to drop lower. Specifically to answer your question, I'm going to revisit that when it comes to it. If it comes to it, if we end up dropping down to the $3,000 range, that is when I will reconsider your question. But for now, I think it's entirely possible, because a lot can happen in 6 months. And yeah, if Bitcoin just keeps on bleeding out, if the halvening becomes a problem, guys, what is the halvening? What is the halvening? Ask yourself this question. The halvening is where Bitcoin becomes half as profitable to mine. And a lot of miners, I was talking to Kirby about this, so, I don't know if he is talking about this in his videos, but if he is, then go watch him as well. A lot of the miners are roughly break even with Bitcoin at this price level. Maybe down at the $3,000-$4,000 range, they would be break even with Bitcoin. So if Bitcoin were to naturally fall down to about $3,000-$4,000 before the halvening, and then the halvening comes and it becomes half as profitable to mine, Bitcoin might end up dropping much lower. And this is the big elephant in the room that no one's talking about yet. It's the halvening event, because in a bullish market, this would be fucking amazing. Restricting supply in a bullish market would be amazing. Hell yeah. Less people are going to be able to get their hands on something that they already want to get their hands on. That's going to drive prices way up. But in a market where people are offloading Bitcoin because all the other markets are crashing and everyone's losing their shit and everyone's just losing all of their money, if Bitcoin becomes harder to keep afloat, are people going to fight for it? Let's be real. People don't fight for ideologies as much as we like to romanticize that they do. When there is a stronger candidate, they will take it and they will jump ship. So this is an event that could have made or broken Bitcoin, that could make or break Bitcoin, and right now, the way we're heading towards this date, don't forget, time is constant. We're going to hit this date no matter what price we hit it, we don't know. If we hit this price level with a bearish sentiment, I don't even want to comment. I don't even want to comment. That's just a bridge that I'll cross when it comes to it. It's still, fortunately, 2 months away. Almost exactly 2 months away. That's not a lot of time, but we will see when that happens. But that might tell you something about your question. Let's go on. Are many participants feeling that massive gaping hole, Four Flies? That's a good question. I don't remember which hole you're talking about, though. Although I do remember that I was showing you a gaping hole. I just don't remember where it was. Oh, right, the 4,000 to 5,000, this area. Are many participants feeling that hole? I don't understand that question. I'm gonna say yes. I think what he's trying to ask is if we hit that level, would many people just ignore it and then send us straight down to the next area where we cross the hole entirely? Yeah, I think that would happen because it already happened, you know, many times. So I don't see why that wouldn't happen again. What about the 200 weekly? Let's take a look at that. The 200, the weekly time frame. Take the moving averages and take the Bitstamp. Let's use the BLX chart. Actually, this is delayed, so let's use Bitstamp. 200 week moving average. I'm going to make this line a little bit thicker so we can see it a bit easier. Let's take a look at what's going on. All right. Wow, that's nice. Yeah. So let's get an exact reading for the 200 week moving average. The exact reading for this moving average is 5,507, and the low that we established today, this chart doesn't seem to be very accurate. The low that we established today was 5,578. So we came within $70 of this moving average, and it is what ended the bear market last time. That's a really good question, Lincoln. Thank you. The circumstances with which we hit this line last time were that, and it doesn't look like much because we are on the weekly time frame, but please, in fact, you know what? I'm going to trace this very roughly with my own line. And now I'm going to show this to you on the daily time frame to make this point. When we hit this line originally, we had already capitulated. We had already calmed down by forming a rising wedge, and then our sell-off slowed down, right? Let's take a closer look. Ah, for God's sakes. We'll take a closer look, and what I'm going to do is show you what happened with our sell-off, how originally it was really fast, really steep, and then it slowed right down. The gradient with which we were selling off became much less intense. Our sell-off wasn't as steep anymore. And those are the conditions with which we hit this important support area. We hit it twice. Today, the sell-off is quick. The sell-off is still fierce. There's still a lot of boiling blood and anger and fear and dismay and sadness and depression about the space. That's the condition with which we hit this line. Previously, we had calmed down a bit, you know, and so it wasn't so bad. But this time, we don't have that same blessing. And that, to me, just means that this is going to be an interesting thing to trade and watch for a little bit, because like Lincoln, there are a lot of people who are interested in what this moving average is saying, but I don't have much faith that it's going to be the end of the bear market. I don't think we're there yet. It's the first day of a really big sell-off. So I think we'll end up trading below it, and that's scary because that means we'll end up trading below the moving average, which means it might become resistance, and that would not be good. That would be very hard. That would be very hard to overcome. Let's see how this has operated. We've actually never been below this moving average, so this would be a first. Yeah, as far back as this chart goes, BLX chart doesn't go much further back, does it? It goes a little bit further back, but even this, Bitcoin has never traded below this line on any chart I can see. So if we end up trading below this line, that would be a first. And I don't know. I don't know. What I do know is that would be a very bearish sign, and we're already in a bearish market. So round 2 of a massive capitulation sell-off could be around the corner. I don't know. It could be. It's quite unpredictable as it stands right now. That would be beautiful to trade. That would be beautiful. If we can get everyone in the space talking about this line so that they get terrified of it, and then we can short it, that would be amazing. I would really enjoy that. So let's take a look at. I think I just got a message here. No, okay. So that's the weekly analysis. What else have we got? Not many more questions by the looks of it. Are you watching the stock market right now? Wall Street suspended. Ah, is it? No, I'm not watching it. Let's take a look. No, it's still going. Yeah, it's still going. Wall Street was not suspended. It opened while we were live, but not suspended. I maybe certain markets are, but not the not some of the big indexes and stuff like that. It seems like. All right, so I'm going to take a couple more of your questions if we have them. Otherwise, we're going to be looking to wrap up. Alexander Hermans asking, you want to join the group? Awesome. The way you get in is by clicking on the first link in the description down below. Then click on the at Full Flies button. And then click on send message to ask me how to get into the group. We'll give you all of the details. Give you the pricing, give you the benefits. Give you the 50% discount that's running right now. Only a couple days left of this discount. Price has to go up again because Bitcoin has dropped in value. So it's gotten a lot cheaper to get in. And so we need to move it back up. You want to get in the group, see how these people have been able to pull results like this, gain access to, as I put it over here, how I'm trading the ups and the downs, how I'm making money when other people are shitting themselves, taking advantage of the price speculation in this space. If you want to see how I'm able to do that, doesn't mean I'm pulling green all the time. But if you're able to see how I'm enforcing the discipline that I teach you guys about, that other people have taught you about in books and stuff like that, how I'm doing that in the market right now, VIP is where it's at. Steps to join are right there. If you've got any more questions, we'll go through them. Otherwise, it's going to be time to round this one off. "39 minutes ago, trading on Wall Street suspended. Trading has been suspended on Wall Street, triggering another massive sell-off in Europe. Just take a look at the UK's FTSE 100. No new sell-off in Europe. There was one earlier today. I think while we were still live, it looks like actually this is about to break down again. This looks really good to trade. I wish I was trading this stuff. I will start trading this very soon and be sharing that analysis with you along with how I'm trading it and different things like that. Do I have any alt that actually reacted well to the sell-off? Ripple, by the looks of it. Ripple's up by 2%. Although it's dumping right now. Ripple's up today. Although it's up against Bitcoin. So, I mean, Bitcoin's already down by 22%, and Ripple's up by 2% on top of that. So, no alt is doing well, and I think that's because I think that's what happened. Someone just commented it happened. Is that? Oh wow, is that what I'm talking about? No, it's not. You know, I don't think any alt can do well in this environment, purely because if Bitcoin is being sold off massively, then other people are rushing to get their money out of alts into Bitcoin and then into fiat. That's usually how it goes. And so what we're actually seeing is that Bitcoin against the dollar is down by 22%. But for example, Tron against Bitcoin is down by 7%, Litecoin against Bitcoin down by 8%, bcash against Bitcoin down by 13-14%. This is why I don't dabble in the shitcoins. I don't care or pay any attention to shitcoins because they dump really hard. They're just not worth being around. A lot of people who don't understand how to trade on leverage, who haven't had access to the amazing tutorials that Full Flies put out in the VIP library for VIP members to access and study, you know, they might not know how to trade certain things against, you know, with leverage, and so the only option they feel sometimes that they have is trading shitcoins, and it's a terrible, terrible idea. If we take a look at how hard Ripple has dropped today, let's take a look. From wick to wick, Ripple is down by 30 to 33%, and Bitcoin is down by 30%. Another coin, let's take Let's take bcash, because bcash looks like it's been hit really hard. See how bcash has done from wick to wick? 36%. So a lot of these altcoins are suffering bigger losses than Bitcoin, simply because they're smaller. Bitcoin itself is really small. And again, this is amazing. This is amazing if you're in a bullish, optimistic, happy, successful, bright, shiny market. But if you're in a depressed and scared and terrified and defensive market, these speculative investments crash. They crash. They fall to shit. In the strongest terms possible, they fall to shit. That's what we're seeing today. What else have we got? Full Fly is so disciplined. Hell yeah. What else have we got? Yeah, I don't do many live streams. Someone commented, nice to catch you live for a chance. I don't do many live streams, but I do enjoy doing it when I can. So that's something I try to do. I might do some more of them. I don't know. I have been doing them as of late, but not in the frequency I used to. I tend to reserve them for when it really is time to go through your questions, and also when there's a lot to talk about. And today seemed like we had that opportunity. Let's see what else we've got. I'm not going to be analyzing certain charts like Link, for example. I'm not interested in altcoins, I make that quite clear. Something tells me Bitcoin won't end the day at less than $6,000. What do you think about gold? Yeah, let's take a look at gold. I don't do much analysis on gold. Gold is down by 3% today. I don't do much analysis on gold, but overall the trend is up. It does have sell-offs at weird times, I won't lie. Because if money is going out of gold today, I don't know where it's going into, unless it's just cash on the side ready to jump in on a cheaper gold. Overall, the trend is higher. Maybe it makes a little bit more sense to analyze it, for example, on the weekly time frame. And right now, I think what we are starting to see is just a little bit of price compression before potentially it blows up. That's what I think of gold. I don't trade gold. I don't trade anything really other than Bitcoin. So I wouldn't be able to offer my opinion so readily on that until I become a little bit more experienced in those markets. I'm going to stick to what I know best. Do I consider the situation in which the price of mining after the halving is too low to be worth mining? Cost of Bitcoin mining in China before halving is $4,500. Yeah, that's kind of the point that I was making earlier, talking about the halving date, where in a bullish market it's amazing, but in a bearish market it could be, the final nail in the coffin. That's not something I want to talk about because it's still a bit too far away, and one of the problems with this is I'd be saying if something happens, and if something else happens on top of that, then this might happen. And as you know, if you multiply probabilities, if something has a 0.5% chance of happening, or rather I should say 50% chance of happening, multiplied by something else that has a 50% chance of happening, your end result is it has a 25% chance of happening. I hope that makes sense. That's basic math. You multiply two probabilities together, and the overall probability that both of those things happen is low. It's lower. And that's why I don't want to talk about that yet, because first we would need to drop down to $4,500 or so, or we would need to drop even lower, which, looks very likely, but then we would have to, then speculate on what might happen. And there's two problems with that. First of all, jumping to some conclusions, but the second problem is we might drop down to $4,500, but we might drop down in a way which is very quietly bullish, in a way which we can see a lot of bullish signs, or we might just keep capitulating down. We don't know how we're going to drop down there if we drop down there, and so there's a lot of things we need to evaluate first. In any case, I don't think it's going to be good news if we still have a bearish sentiment in the market and this hardening comes along and makes it even harder to acquire new Bitcoins, then yeah, that can't be a good thing for Bitcoin. So we'll get a better idea of how that's going to look as the time goes on. But I think that's everything I'm going to be covering in this live stream with you all today. If you have enjoyed this live stream, hit up the likes, subscribe, tick the bell, do all that good stuff that you know you want to do. If you want to see how members are able to pull this kind of lifestyle, pull the kind of profits that you can make even in turbulent, dreary markets. You know, one of the things I was telling you about a couple days ago is how I was playing a short position from a resistance level. I think it was around over here, where you know, I saw that the market was bearish and I was ready to trade the short side. It doesn't always work out amazingly, I'll be honest, in the range as recently it hasn't. But if you want to see how I'm still making those conclusions based off the discipline that I have, where even if there is a rough patch, even if there is a rough patch, doesn't mean it's the end of it. You're able to see how I can stumble and then I get right back up. Because yeah, even the most successful traders will have a lot of periods where they're just on losing streaks and different things like that. But the most important thing is to be able to see how they handle that. How, for example, when a loss happens, they might be changing up their strategy. And there is so much that you can study of how I've done that in the past in the VIP group. How I handle the winning streaks, the losing streaks, everything in between. You get access to all the history of what I've been doing in the group. So that is not just the stuff you're seeing in the VIP library, so all of that content that's already there for you to study, but just, you know, literally looking at what's in the VIP group and cross-referencing that with what happened on the chart and how I reacted in certain situations. You can see how I've done it and potentially learn from that. Some really cool testimonials I got here. A member over here, once again, who pulled $30,000 within a few days, a yearly salary just from trading. This stuff is possible in bear markets. Like I said, it's actually potentially easier in some cases because now you know which price levels that you're hitting. You know where you're trading. You know where the resistance is. You know where the support is. You know what price levels you might interact with, and that can make it a lot more predictable. So entirely possible to make some really nice profits in tight ranges. Again, members over here paying off the fee times over again. And also, you don't need a massive bankroll to be in the group. We've had a lot of members who aren't playing with a lot of money, less than €1,000, less than $1,000, but still able to learn really well from what information there is in the group and potentially even pay back the fee of the group within just one trade, different things like that. Not typical, not common. Most people always lose a lot of money, but there is a learning experience here. And like I said, what you're doing with this game is you're playing the risk. You know that the risk is losing a lot of money, but you acknowledge that and you take the risks anyway because you stand to gain so much. It's a high risk, high reward game. I think it's well worth it. You know, I've thought about this a lot, and I think that trading is something I'll always do because of that. There is no faster way that I've ever seen to make money than trading, and for that reason alone, I think I'll be here for a very long time. I'm already, you know, looking for ways to expand and various different things like that. Have expanded even, you know, with things like the course, and we've just brought someone new onto the team a couple weeks ago as well. So, not going anywhere. You know what to do if you want to get in. It's been a pleasure being live with you all today. It's been a long one. I think it's been an hour and a half or something. Yeah, near about an hour and 20 minutes. It's been a long one today. And maybe I'm going to do a little bit more soon. 4 Flies Gold is free. It's the first link in the description down below, Jackson. It's free. VIP does cost. The way to find out about it is by following these 2 steps over here. Click the first link. That's going to take you to the free channel. Then click on 4 Flies and then send message to ask me how to join VIP. We'll get you in. Alright, I'm out. Peace.